Welcome back to the channel, everyone. Today I want to talk about another hedge fund biting the dust. I also want to show you the most bullish confirmation that we're right that I've ever seen. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, quant hedge fund Soleil's is the shutter after 11 years of trading. The firm cites difficult environment for futures market traders. Soleil's systemic program's latest assets under management is only $51 million. They've said they're closing their doors after 11 years, following a decline in assets amid poor performance. Clearly 2021 and 2022 have not been good years for Soleil's capital management, and I think they're just one hedge fund in a long line of hedge funds that are going to be bankrupt this year. Over the last few months, we've already seen a large number of hedge funds shuttering their doors due to massive losses in 2021. I imagine many of those losses have been sustained from shorting companies like AMC and GameStop. James Walker, a managing partner of the firm, confirmed the decision and said while they continue to believe in the power of their trading system, asset levels were insufficient to support the business. The firm managed more than $400 million at its peak in 2015. So their $400 million fortune has reduced to only $50 million, a fall of about 87.5% of their entire fund. He said smaller funds are finding it increasingly difficult to remain in business as costs rise and investors migrate to bigger investment firms. More than 400 hedge funds shuttered during the first 3 quarters of last year. So during January to September 2021, when meme stocks were all the rage, over 400 hedge funds had to close down due to significant losses. Guys, if you saw my video the other day about Fidelity supporting short selling and not wanting short selling to be made public, and you now want to move away from Fidelity, Moomoo are currently offering a free share of AMC and 5 free shares valued up to $3,500 each when you sign up using the link in the description below and make your first deposit. When you sign up and deposit your first dollar, you get 2 free shares valued up to $3,500 each. If you can deposit $100, you also get that free share of AMC, and if you can deposit $2,000, then you also get another 3 free stocks valued up to $3,500 each. Moomoo is a brilliant commission-free trading platform that doesn't make their money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also has excellent technical indicators and advanced charting tools. They also publish daily short selling volume on top of a number of other important pieces of data. Now I also wanted to talk about this massively bullish confirmation tweeted by Hang Loose. He tweeted saying, when is someone going to mention that almost 100% of AMC shareholders are currently in the red? He said this isn't even statistically possible. In what world does everybody holding make the price keep falling? That's the exact opposite of how stocks work. So this is the position cost distribution chart for AMC. We can see that most shareholders of AMC hold shares in the $50 to $60 region and also the $40 to $50 region. There's also a good chunk of shareholders here in the $20 to $30 region, and very few shareholders that hold shares under $20 a share. Now the price of a stock is controlled by supply and demand. When there's lots of people selling shares, the price of a stock tends to fall. When there's a massive influx of buyers, the price of a stock tends to rise. So therefore, when a stock is falling, you'd see all of these bars getting smaller and smaller as everybody that holds shares would be selling, causing the price to fall. But obviously with AMC, we're not seeing any shareholders selling here. Everybody is still holding their shares, even though they're in a loss position, and yet the stock keeps falling. In most stocks, this chart is about half green and half red because usually at all times, there's an even balance of buyers and sellers. There's an even balance of people in profit and wanting to buy more shares, and also people that are in a loss position that tend to sell. But with AMC, only 2.2% of the shareholders are currently in a profit position, which is just incredible. Because what this shows is that the price is falling even though people aren't selling their shares. People aren't selling for a loss or a profit, they're still holding even though it's not profitable, and yet the price is still falling. Now obviously you and I know that's due to the massive amount of abusive naked short selling that's piling in tons and tons of synthetic shares into the AMC market, causing the price to drop. And Edward Burchuk just posted an updated photo as of yesterday when AMC fell to around $20 a share, now showing that there's basically 0 people that are holding a profitable AMC position. Right now on Webull, 0.0% of users are currently holding a profitable AMC. And this just goes to show that we are right. People aren't selling their AMC, they're continuing to hold. There is basically no selling pressure other than the amount of synthetic shorts that are still coming into the market. And Hang Loose is also showing us some interesting data. BlackRock and Vanguard have an average AMC share price of $47.37 per share. Now that means BlackRock and Vanguard are currently down $2.3 billion on their AMC position. Institutional owners, as a whole, are down about $4 billion in unrealized losses. So he says, be happy we can continue to load the boat now before the fireworks. All of these hedge funds are holding AMC with $4 billion in unrealized losses, but they aren't selling AMC because they know the price is going back up. You can see from this screenshot, Vanguard and BlackRock have an average share price of $47.37. Geode have an average price of $47.35. State Street a lower average price of $33.44, Northern Trust $33.44 as well, and there's more down here as well. Again, interestingly, Renaissance are also holding their position up at $47.37 per share. Now I have been checking the AMC 13F filings on a daily basis to see when some of the larger hedge funds start filing their 13Fs, as to whether they're still holding AMC. We have seen some promising instances, like D&B Asset Management, holding their shares at the end of December and even buying more and basically tripling their overall position. We've also seen UBS O'Connor selling off all of their puts at the end of December. I think it's important to remember that when these filings were made on the 31st of December, the AMC price was around $28.76, and therefore any fund that is still holding AMC as of their Q4 filings is going to have held through the 50s, the 60s and the 70s and won't have sold their AMC. If these funds are still holding their AMC at the end of Q4, it means they know AMC is going higher and therefore they didn't want to sell at $60, they didn't want to sell at $50, and they're happy to hold down to $28 a share because they know AMC is going back up. When more of the funds start filing their 13Fs, I'll be sure to keep you updated as to who's buying and who's selling. I imagine that many funds are going to still be holding their AMC because they know it's going higher. Now I also want to talk about how this time Fox News took things a little too far. You may have seen yesterday that Fox News posted this article saying closing the curtain. Popular movie theatre chain goes private after selling final stocks. And the tagline for the article said AMC CEO is done selling company stock. Now there were some rumours that this was like a fake article. Charles Payne looked at this and said it didn't look real. He was absolutely astounded and thought it must have been photoshopped. But I actually saw the original tweet from Fox News. Charles Gasparino even replied and saying, sorry, they're fixing it. I alerted the web team. And Tara said they better. This is so misleading and ill-timed. And she said even you know that this is too far. We know that Fox News and Charles Gasparino have been trying to manipulate the price of AMC for some time because they obviously side with the hedgies, especially as Fox, the mainstream media, is owned by the hedgies. But posting something that's outright incorrect and just absolutely ridiculous is just a step too far. Obviously, Adam Aaron isn't going to turn AMC into a private company and delist it from the stock exchange. It really makes me wonder what their excuse is going to be this time. Obviously, you can't really blame this one on a computer glitch because this article and this tweet must have been hand typed. bankrupt. And finally, I also wanted to tell you to be careful and to be sensible when AMC does squeeze. We know that AMC has become such a large event that it is at some point going to be controlled by the SEC and the Department of Justice. This tweet says the price that AMC runs to will effectively be determined by how bad the entire market takes a hit, and then it will be over. All of the pieces and the players are already in place. When AMC squeezes, it is going to cause a large number of hedge funds to be liquidated, and it is going to cause a market crash. And he says when the market takes a hit, the powers that be will shut it down. If the SEC or Department of Justice have the smallest proof that any stock has been manipulated, what's the very first step they take? And it's to either delist the stock or to halt or freeze the trading. There was a video I posted the other week about non-regulatory halts and how the SEC can halt the trading of a stock for 10 days whenever they see fit, really. I think when it all boils down to it, the SEC and Department of Justice need to let AMC squeeze for the shorts to be closed out and for the market to go back to normal. But they do need to control the squeeze to ensure the entire market doesn't crash too badly and to make sure it doesn't crash the financial system. And Blue Eye says the advice I give is to not be greedy. Take what you're comfortable with. Obviously, this is why I've suggested to sell in multiple increments on the way up. Obviously, start by selling small amounts and try and maximize your profits for later in the squeeze right towards the tippy top. But obviously be wary that it is likely that the SEC and the Department of Justice are going to get involved and halt the squeeze if it gets too out of control and the entire financial system is at risk. And he says, as an example, with Enron, which peaked at over $90 per share. When all was said and done, the largest single shareholder got most of the money from the bankruptcy court. The rest of us, me included, received our checks 7 years later at only $6 a share. And therefore it's likely that when the SEC and the Department of Justice halt trading on AMC and GameStop when it squeezes, if you haven't sold all of your shares at that point, after the halt, you won't really be left with much. Guys, be sure to let me know down in the comments below what you think about this next hedge fund biting the dust and who you think is going to be next to topple. And also let me know what you think about 0.0% of AMC shareholders currently being in profit. And guys, if you want to stay up to date with all of my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the private Discord and the Patreon, linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.